In the fast-paced world of stock investing, few strategies cut through the noise like Eric Fry's sell this, buy that approach. As a veteran investor with over 30 years of experience and the title of America's top trader, Fry has built a reputation for bold, contrarian calls that challenge Wall Street consensus. His latest presentation, hosted by Investor Place, promises 7 free trade ideas, including 4 sell stocks to ditch and 4 buy alternatives that could potentially double your money in 12 to 24 months. But are these recommendations worth acting on? In this video, we'll reveal Eric Fry's sell this, buy that stocks in full detail. Drawing from the clues we were able to find in his most recent interviews and presentations, we'll break down each pair, evaluate the rationale, assess current valuations, and explore potential risks and rewards. We'll also examine Fry's track record. Whether you're a seasoned investor or just starting, this video will equip you with everything you need to decide if Fry's picks align with your portfolio goals. Who is Eric Fry, the man behind the sell this, buy that strategy? Before diving into the stocks, let's understand the source. Eric Fry is a macro-focused investment analyst who has navigated global markets for decades. He spent nearly 20 years specializing in international equities and another decade managing portfolios. His crowning achievement came in winning the 2016 Portfolios with Purpose competition, beating out hedge fund legends like Bill Ackman and Joel Greenblatt with a 140% return versus the market's 12%. Fry's philosophy is simple yet powerful. Avoid bad risk and embrace good risk. He learned this the hard way after losing a $200,000 inheritance in the 1987 Bonneville Pacific fraud. That lesson shaped his sell this, buy that framework, pairing underperforming giants, overlooked disruptors. Fry edits Fry's Investment Report, a monthly newsletter from Investor Place Media. Normally priced at $499 per year, it's currently discounted to $49 for 6 months, an 80% reduction with a 90-day money-back guarantee. Subscribers get 12 or more stock picks per year, weekly updates and trade alerts, a model portfolio, and bonus reports, which we'll cover later. If you were interested to learn more how to upgrade your portfolio, you can find a link to the service in the comments below. Eric Fry's sell this, buy that presentation, the core thesis.
Fry's pitch, titled "How Would I Invest $10,000 If I Had to Start All Over Again in 2025?" argues we're in an age of chaos driven by AI, trade wars, and technological disruption. Sacred cows like Amazon and Nvidia are vulnerable, while under-the-radar companies in robotics, fintech, and AI infrastructure are poised to explode. He revealed 4 sell stocks and 4 buy alternatives for free. The remaining ideas are locked behind his newsletter subscription, scattered across bonus reports like Optical Fiber Fortune, the $24 trillion rise of robotics, the race to AGI, and energy swan song. Let's reveal the sell this, buy that stocks and analyze each pair. Pair 1. Sell Amazon AMZN, buy Coupang CPNG. Why sell Amazon? Fry calls Amazon a prime victim of the trade war. Up to 70% of Amazon's marketplace goods come from China, making it vulnerable to tariffs under Trump administration. AWS, Amazon Web Services, once a growth engine, has missed earnings expectations for 3 straight quarters. Amazon is pouring $100 billion into data centers, a high-stakes bet that may not pay off. Fry warns its profits could get majorly squeezed. Why buy? Coupang, NYSE CPNG. Dubbed the Amazon of South Korea, Coupang dominates a highly connected market. It generates $30 billion in revenue, but trades at a fraction of Amazon's valuation. Analysts project 700% profitability growth by 2027. Fry sees it as Amazon in 2005, but with stronger momentum. Coupang's market cap sits at $47 billion compared to Amazon's $1.9 trillion. Its year-to-date return is up 45%, while Amazon is down 12%. What are the risks? Coupang is regionally concentrated. Any Korean economic slowdown could hurt. Pair 2. Sell Tesla TSLA, buy Symbotic SYMB. Why sell Tesla? Tesla is getting crushed by Chinese EV rivals like BYD, which sells cars for $10,000, a third of Tesla's cheapest model. The Optimus robot has no pre-orders. On the other side, Elon Musk's political distractions have hurt sales.
Why buy Symbotic, NVDA? Symbotic's AI-powered warehouse robots are already deployed, moving 25 miles per hour and carrying hundreds of pounds, versus Optimus's 5 miles per hour and 45 pounds. Revenue has grown 15 times since 2019 to $1.8 billion, with a $23 billion backlog. Tesla's 2024 revenue was $97 billion, with $13.6 billion in net income, while Symbotic posted the $51 million loss. Year to date, Symbotic is up 110%. Tesla is down 28%. Forbes recently wrote, "Symbotic isn't selling robots, they're selling survival." Risks to consider: Symbotic is unprofitable and trades at a sky-high valuation. Pair 3. Sell Bank of America, BAC. Buy Block, SQ. Why sell Bank of America, NYSE, BAC? Traditional banks are money museums. BOA's 3,700 branches are seen as a liability in a digital world. Fintech apps like Cash App have replaced checking accounts for Gen Z. BOA's digital efforts are bolted onto decades-old systems. It is seen as a value trap. Cheap but stagnant. Why buy Block, NYSE, SQ? Block's Cash App is a full financial ecosystem, handling paychecks, investing, Bitcoin, and loans. Square dominates small business payments. User growth is explosive with high switching costs. Block generates twice as much revenue per employee as Bank of America. It grows at 10 to 15% annually, while BOA manages 3 to 5%. Year to date, Block is up 25%. BOA is up 8%. Block offers the best value growth combo. Risks, regulatory scrutiny on fintech, Bitcoin volatility. Pair 4, sell NVIDIA, NVDA, buy Corning, GLW. Why sell NVDA? The AI king is losing its moat. 4 customers accounting for 46% of revenue, Amazon, Google, Microsoft, and Meta, are building in-house chips. Profit margins dropped from 78% to 71%. A $5.5 billion China write-off and cheaper competitors signal peak hype.
Why buy Corning? Corning supplies optical fiber cables, the backbone of AI data centers. AI facilities need 10 times more cables than traditional ones. Production's tripling monthly, with 80% of 5-year output pre-sold. A $1 billion Michigan plant avoids tariffs. NVIDIA's year-to-date return is up 150% with a 3-year gain of 1,200%. Corning is up 60% year-to-date and 90% over 3 years with a 2.5% dividend versus NVIDIA's 0.03%. Corning is developing light-speed data transmission tech for AI networks. It is seen as the best value play, undervalued, dividend growing, and structurally essential. Corning risks, cyclical demand, execution on factory expansion. The bonus reports, 11 more sell this, buy that ideas. Frighties has 11 additional recommendations across 3 reports, requiring the $49 subscription. The $24 trillion rise of robotics includes 3 robotics buys, 1 industrial automation sell with insiders dumping. The race to AGI includes 3 AGI-exposed buys, 1 sell at risk of going to zero. The energy swan song includes 3 legacy energy buys, AI data center equals city-sized power demand, 1 risky renewable sell. Plus, insider exodus, 5 stocks C-suite execs are dumping. Fry claims he discovered 41 stocks with 1,000% or higher gains. Verified examples include InterDigital with 1,000% plus long-term, Bitcoin in 2015 for 200 times potential, sell Twitter by Ormat where Twitter fell 64% and Ormat rose 100%, and sell GM by Sims Metal where GM went bankrupt and Sims gained 100%. Criticism. Many wins are long-term, international, or small cap. Not all subscribers catch every gain. Valuation check. Are Fry's buy stocks overvalued? Coupon trades at 18 times forward PE versus the e-commerce sector average of 25 times. Symbotic, loss-making, has no PE, but robotics peers average 50 times, it's speculative. Block at 16 times forward PE versus fintech's 30 times is the best value. Corning is attractive at 26 times versus tech's 22 times. What are the risks of following Eric Fry's advice? High valuations. Coupon and Symbotic trade at premiums requiring flawless execution. Macro risks. Trade wars, recession, or AI hype deflation could hurt all picks. Concentration. Many buys tied to AI infrastructure, creating correlated risk. Subscription upsell. Free picks are solid, but best ideas are paywalled. Who should follow Eric Fry? Fry's ideas are ideal for long-term growth investors, tech or AI enthusiasts, those willing to go global like Coupon. Fry's suggestions are not for day traders, income-focused investors except Corning, risk-averse retirees. Final verdict, should you act on Eric Fry's picks? Eric Fry's sell this, buy that stocks are bold, well-researched, and timely. Corning and Block stand out as the strongest value plays with real doubling potential in 12 to 24 months. Coupon and Symbotic are high-risk, high-reward bets on regional dominance and robotics. While Amazon, Tesla, NVIDIA, and BOA face legitimate headwinds, selling them entirely may be extreme for diversified portfolios. Consider trimming instead. Thank you for your time today for watching this video. Please like and subscribe. See you next time.